It's a pleasure to be here and to speak with all of you. And I'm so excited to see a room full of people. So you've already made that commitment to understanding repaying your private education loan is extremely important, so thank you. What's that? Oh, sorry. If you can't hear me, let me know just by raising your hand. So first, I'd like to congratulate you. You've either made the decision to go to college or you're currently attending a college or university in the area. And as you are well aware, education is a lifelong investment. So what does this mean to you? Well, part of borrowing for your education means that you also have an understanding that you need to be aware of what it means to repay your private education loans. So today we're going to cover some things about what's good to know and also what is a must-do. For the purposes of this presentation, we will be talking about private education loans. The federal government now offers the Direct Stafford Loan and the Direct Plus Loan. So they are the entity that would be better equipped to answer questions about those loans. It is possible for you to borrow from multiple lenders throughout your college curriculum. You may borrow from one lender one year, and then you may borrow from another lender in your sophomore year, for example. But you want to always make sure that you know who your student loan lender is, and that's your responsibility. If you don't know, you can always check with the financial aid office, or you can review the documents that you signed way back when in the beginning of your college curriculum. But it's always good to have a list of lenders that you've borrowed from so you know who to contact when you start to go through your repayment process. So what to do upon graduation from college? You definitely want to contact your lender via email or sign up for their online billing services. And if you sign up for the online servicing, you also want to invite your cosigner. Your cosigner is equally responsible for your private education loan. So you want to make sure that they are aware of what's going on because they also have a vested interest. And believe it or not, repayment is required. And this is true when you signed your consumer credit agreement or your promissory note. You made a legally binding agreement to repay your loan. You also want to make sure that the lender is aware of any email changes or address changes for you. If you've recently gotten married, you want to make sure that they're updated with your new name. This may all seem like common sense, but it sometimes slips through the cracks. So you want to make sure that you're treating your student loan like any other credit product, such as a car loan or a car payment, cell phone, for example. And keep in mind, any missed payments are going to be recorded on your credit report as delinquent payments. So that's pretty much what you must know. Now, what are some things that are nice to know? You want to get organized. If you aren't already, as I mentioned earlier, get copies of your credit agreements and your promissory notes and read them again to understand what your terms and conditions are and what your responsibility for repayment is. You want to keep a record. You want to know where to send your payments. You want to know where to send your correspondence to. And you want to keep track of the lender's customer service phone number as well as the lender's website. This will keep you up to date on any changes that may occur with your lender. And also, if you weren't required to make payments while you were in school, you can also take advantage of a grace period. And a grace period is a period of time where the lender doesn't typically require payment, which would be typically 6 months after graduation. It's also good to know that if you're having trouble making your payments, you will be able to contact your lender. They're there to work with you. So definitely let them know. Again, it may seem like a no-brainer, but open your mail. Make sure you open and read everything, because that is how your lender is going to be contacting you, unless you've signed up for email-specific correspondence. But again, if you signed up for electronic statements, you want to make sure that those statements are not going into your junk mail file, so make sure you set up an account in your address book. And also, you'll be getting a repayment schedule before your first payment. For most lenders, it's typically going to show your loan balance, your estimated total interest, what number of monthly payments you'll have, the amount of each of those payments, and the date that your first payment is going to be due. You should also open your mail because identity theft is on the rise. So you want to make sure that you're aware of what correspondence is coming in, and then anything that needs to be shredded can also be shredded. So now we want to get interested in your interest rate. You want to know if your rate is fixed or if it's variable. Fixed rates will stay the same throughout the life of the loan. Variable interest rates are going to fluctuate with market conditions. The two main components that a lender will base their rates on would be the prime rate or the LIBOR rate. And you want to know the difference so you can keep track of those market conditions, especially in a variable loan. I've included a repayment example here, capitalization of interest example. So you can see the difference about making interest payments while in school versus making payments while you're out of school. So you would have the loan amount, say $15,000, capitalized interest over 12 months. For example, if you didn't pay while in school, would have accumulated to $1,185. If you made interest, or if you didn't make if you made your interest payments while in school, that would be a zero amount. So principal to be repaid at graduation, for example, if you only took out for 1 year, would be $15,000 versus $16,185. Monthly payments would be $181 versus $196. And number of payments should not have a dollar sign in front of it. It should be 120 for both. And at the end, the total amount to be repaid, if you paid interest while in school, would be $21,744 versus not paying the interest while in school, you'd owe $23,462. So that's already a difference of $1,718. You can see how that quickly adds up over time. So if at all possible, while you're in school, if you have some extra money, definitely start paying down your interest as soon as possible. So we really want you to be assured even in uncertain times. You know, everybody is well aware the economy has been interesting over the last several years or so. So we just want to make sure that we're preparing mentally and physically. A good practice to start during your first job would be what we call the cushion theory. Start making mock is, how soon after graduation should I expect to receive my repayment schedule? And that would be approximately 5 months after graduation, because typically you're going to have a 6-month grace period. So you're your lender will be starting to send that information typically in that 5th month of your grace period. Yes? Mhm. The question is, if you're entering into a graduate program, you've already completed your undergraduate program, should you contact your lender to let them know? And the answer would be yes. You definitely want to contact your lender to let them know that you'll be in a grad program. If you need additional loans, you can take more loans out at that time, and you'll be eligible to receive a deferment of making payments on your current loan. But you definitely want to inform your lender.
So along the lines of that same question,
Mm-hmm.
contacting the lender, is there any benefit, or is it just to seek, like if the prize loan or loan through that same company, or is it still, still things that you can look around?
It really makes sense to look around. The question was, is there any advantage in staying with the same lender? Market conditions fluctuate on variable education loans, variable interest rate loans. So you always want to make sure that you're aware of what's out there. There may be repayment benefits that one lender is offering that another is not, or upfront incentives, things like that. So you always want to make sure that you're aware of all the different options that you have. You're welcome. Any other questions? Okay, we're back. So now that you've had a moment to think about the cushion theory, when you receive your first paycheck, it's a good practice to start putting away your monthly loan payment to get into that practice ahead of time. And this will help you if you run short on your monthly budget. You also want to check to see what your lender's loan forgiveness policy might be. It's something that you never really want to think about, but in the event of death or permanent disability, some lenders will forgive your loan, but we want to make sure that you're aware of that, because otherwise the burden of debt could go on to your cosigner if you have one, or one of your loved ones. And if you run into trouble, as you know, no one is perfect. Almost everyone runs into some financial difficulties during the life of their loan or over their lifetime. So what you want to do is make sure that your lender is aware that you are having difficulties. Never skip a payment. Your lender is there because they want to have a lifelong relationship with you. So if you're having trouble making those payments, make sure you contact your lender. If they don't know about it, they can't help you. And there's always a way to assist you through making those payments. Now we'd like to be poised for success. So what does that mean? In real life, it may mean more ramen noodles. But living like a student is hard. Being on a strict budget isn't a blast. But continuing to be thrifty will help you out in the long run. So we want to make sure that you don't overborrow by utilizing your credit cards where you can't, you get into a situation where you might not be able to repay your credit cards. You get in a good practice of paying those off on a monthly basis. And no one is telling you not to spend money. You're going to spend money, whether it be daily, monthly. But we want to make sure that you're going to be utilizing your budget and spending plan wisely. This is going to be a lifelong goal, and you want to make sure that you're always going to be financially successful. So knowing the basics, how do I create a spending plan? Well, your expenses should not exceed your income, and you want to keep track of what you're spending. Spending plans are designed to assist you in managing the money that you are spending. Again, nobody is telling you not to spend money because they're saying, maybe it's a good idea to create a budget. Knowing the difference between needs and wants is crucial. Recognizing that you may want something, but realizing it may not be in your best interest at this time is a great sense of financial maturity. And credit cards are also not loans. If you can't pay the balance in full, you'd be going in the wrong direction. So this is just an example of what a spending plan might look like. It's also known as a monthly cash flow worksheet. It will show different types of expenses. For example, fixed expenses, variable expenses, and discretionary expenses. So plan for your future. Where do you really want to be tomorrow? What are your goals for the future? I'm guessing a lot of people have asked you this question recently, and nobody is really trying to put pressure on you. They really just want you to start thinking about your goals and your future to assist you in being successful. So what would you like to accomplish 1 year after graduation? Maybe 3 years or 5 years. Be realistic about setting your goals. It's also difficult sometimes to think beyond your finals next week or even next year. But doing so can help you realize your goals and place you in the driver's seat. Setting your goals. You are 80% more likely to achieve your goals if you write them down. So how do we make that happen? Well, we write it down. You want to be specific and realistic. You want to start with small, short-term goals, maybe a 6-month goal. And then you also want to add longer-term goals as well. What would you like to achieve in 1 year, 5 years, for example? And keep in mind, to be financially successful, if you save $20 a week, that would equal about $1,000 a year. And over 5 years, that would be $5,200. It might mean one last night at the pizza place, but in the long run, it would be beneficial. Also, to help you meet those goals, it's going to take discipline, and you're going to have to revisit your goals and revise them. Just because you've written down a goal doesn't mean that it can't change or adapt. But you want to make sure that you're keeping control over your spending, and that takes discipline. But it can also be fun to search for ways to save money and feel rewarded when you get a good deal. So, when you're shopping, you want to make sure that you're considering your needs, that you're determining how much that you can spend. Many retailers in this day and age are offering the same product at different costs, so you want to make sure you're doing all of your research and your comparison shopping. You want to make sure that you are finding the best overall value, so you're not overextending yourself. And you also want to follow up if there's an issue with the purchase that you've made. And also, what's even more important is there's price matching when you're doing your shopping, whether it be online or actually physically in the store. Knowing what your finances are and being savvy is more than just about clipping coupons. We want you to be sure that you're aware of what options are available for you. Be informed. Ask about interest rate reductions. You also will likely have to negotiate a lot of times to get the deal that you would like, and that's okay. It's much like your health. You want to take ownership of your health to ensure that you receive the best health care that's available. And we want you to mirror your financial philosophy according to this. It's all up to you. So are you astutely certain? Credit ties in strongly to borrowing private education loans. Why? Because good credit can help you get utilities. It can help you get a job, rent an apartment, or get a loan for a house or even a car. All of these things are factors that affect your credit. And credit is a long-term commitment that, when used wisely, can be your greatest asset. So what is a credit score? Well, a credit score is a mathematical analysis of the information on a credit report. And it's based on trending statistics of millions of credit accounts. Credit scores range anywhere from 300 to 850 points, and a high score predicts minimal credit risk. So the higher the score, the more you can show that you handle your finances well. Some employers also may do a credit check during the hiring process. So it's a very important tool that you can utilize, that you manage yourself. What comprises a credit score? This is something that we've taken from our hands-on banking program, and it really breaks down all the components of a FICO score. So for example, your payment track record. This is showing whether or not you've made on-time payments and has the greatest impact on your score. What you owe. Owing a lot or being near your credit limit on multiple accounts negatively impacts your score. What types of credit do you have? A balanced mix of different types of credit can help improve your score. New credit. If you're opening multiple new accounts, it may represent a greater credit risk overall. But you can kind of see how it's all broken out here. It is possible that other scores will be considered besides the credit bureau scores when making lending decisions as well. How long is credit information active? The timeline for information to remain on a credit report is going to vary. So positive information, a good payment history, etc., will stay on your credit report indefinitely. Hard inquiries, which could be if you're applying for a car or a home, would last 1 to 2 years. Negative information, such as collections, can stay on your credit report for up to 7 years. If you filed for bankruptcy, that could stay on your credit report for 7 to 10 years. And any liens or unpaid taxes could stay on your credit report 15 years or longer. It's important to know that when you are shopping for a student loan, there's a 30-day window of time where you can shop for multiple loans through multiple lenders, and it will not impact your credit. And again, that's a 30-day window. Those are considered soft hits. So again, using your credit wisely, we want you to keep track of your spending. We want you to show years of positive repayment history, credit that's not maxed out, and not placed multiple applications for open-ended credit, like credit cards within the last 12 months. This will all assist you in maintaining good credit. Live by percentages. Each month, less than 10% of your income should go towards paying off credit card bills. Less than 10% should go towards paying your student loans. A healthy debt level is under 40%, which includes all debt, and that's called your debt-to-income ratio. Be sure to pay off your credit card balance every month. If you are not able to do this, try paying more than your minimum balance due. This will help reduce the principal and other finance charges. And at the very least, pay your minimum amount due. But again, you can always call the credit card company to work out a plan if you are having severe difficulties making your payments. Because you want to remember that interest is capitalizing on top of interest, especially with a credit card. Request, read, and correct as necessary. And this is in terms of your credit report. There are 3 main credit reporting agencies: Equifax, Experian, and TransUnion. Some lenders will utilize only one of those credit reporting agencies to make their decision. So it's best that you know exactly what is on each of those credit reports. So, for example, you're entitled to one credit report from each of those agencies on an annual basis. You can go to annualcreditreport.com to request a copy of your report, and we recommend that you stagger the request. So, for example, in January, if you make the request from TransUnion to have a copy of your free credit report, wait 3.5 months before you request it from Experian. And then after that, wait another 3.5 months before you get it from Equifax. This will assist you of keeping track of your credit throughout the year. And quickly identify any discrepancies by contacting that credit agency to have those things corrected. What's important to recognize here is that you are responsible for your credit history. You own your credit report, not your creditors. So therefore, you should take ownership of making wise financial decisions and correct any mistakes as quickly as possible. And again, this really ties into borrowing for a private education loan because it's so important to keep track of your finances to ensure that you are able to take a private education loan if need be. And again, it's just a wise practice over your lifetime. So I'd like to ask if there's any questions that I can answer. Yes?
You just talked about staggering the credit request. As we're getting closer to fall or the summer, does it make sense if you're, for instance, I'm going to private student loans, does it make sense to pay for my all three now and then stagger? So that I can, as I'm going forward in my shopping period, so that I know what's going on with all three of yours right now?
If you haven't done it before, the question was, should you ask for all three at once for your initial review? And if you haven't requested your annual report before, it could be a wise practice to have a starting point, but you don't have to pay for it. You go to annualcreditreport.com, you're entitled to one free report annually. So it might not be a bad practice to have that initially so you know what you're starting with. Yes?
If you apply for financing and they have a credit report with that, do that count towards
The question is, if you apply through a lender for a student loan, would that count as your free report?
Well, no. Personally, I went and, as a private financing parking lot, and they checked my credit, and something my credit score, is that counting towards my 1-3?
If you apply for any type of credit, such as a car loan, and they pull your report and send it to you, the company that you're financing through, no, that does not count as your free annual credit report. Yes?
I know several years ago when my brother was graduating, there was always talk about consolidating loans, and I know that a couple years ago, I had some loans, and it was brought up that I might consolidate. And I was wondering how that fits into current private or current federal.
Sure. The question is, what consolidation options are available, whether it be federal or private? As I mentioned earlier in the presentation, all federal loans are available through the Department of Education. They do have a direct consolidation product if you'd like to consolidate your federal loans. That would make one affordable monthly loan payment. It's not necessarily for everyone, as it was 10 or 11 years ago when everybody was consolidating and there was a large push. But it is something that is available for you. It is also something that's available on the private education loan side. You can consolidate your private education loans. There would be no reason for you to ever consolidate both together. Typically, the rates will be variable on a consolidation loan, although there are fixed rate options, but it's never a wise practice to consolidate federal and private together. Yes? The answer is, would it negatively impact your credit if you consolidated your loans? And the answer is no. Yes.
I was taught my whole life to be scared of credit cards, basically.
That's a very wise practice. The question was, I don't really have a lot of established credit, and more recently have been acquiring credit cards to establish credit. It's always a wise practice to pay off your balance in full on a monthly basis.
Right, and that will help build up your.
That is correct.
And always just have a zero.
That is correct. Because it shows that you can manage your money wisely and you're not overextending yourself. Yes?
Do you know about loan forgiveness programs? I guess I have heard about some companies that will forgive part of your loan if you do certain volunteer work.
I don't know the specifics. The question is about loan forgiveness for different types of curriculums, for example, and jobs, field jobs, for example. I do know that the federal government does offer loan forgiveness after 10 years of civil service, but there's so many different ones, it's really best to go to the Department of Education's website to find out whether or not your field of study and your job would permit that. Any other questions? The last slide I have.
There's someone back here now.
Oh, thank you.
I had a student who was with me in the year, and she had missed a semester due to health reasons. She was having leave. And she graduated later than, she's going to graduate later than anyone else, I guess, like a semester later. What would happen in her case?
The question is, and I'm guessing it's centered on the grace period. The question is, a fellow student missed a semester due to health issues. What happens upon graduation for that student since they graduated a semester later? And since that grace period has already been taken advantage of through that one semester, the payments would begin immediately upon graduation in most cases. Any other questions? Okay, I have some resources here for you. And the best resource to know about federal education loan repayment is the one that says Department of Education Exit Counseling. This is an excellent resource. It's a PDF booklet online that you can review and go through exit counseling to understand the ins and outs of your federal education loans. Do we know if this presentation will be available online? It will. Okay, great. So if you have any additional questions or anything, definitely field them through the Central Scholarship Bureau. We'd be happy to answer them for you. Great. Well, thank you so much all for your time, and thank you for understanding that repaying your private education loans is just as important as figuring out which lender to borrow from. Thank you so much.